Okay, so in this context, do the bond markets tell you a good story? Because I mean, how long will market participants be willing to buy bonds of countries which are in debt over their heads? It must come to the point of no return, where they say enough is enough or not. To us, it means that interest rates will go up heavily in the future. Wouldn't this kind of event tank the markets worldwide again? I think yes, is it?
Your question is exactly the correct question. When will people stop buying all of these absurd debt instruments? And the answer to that can only come from a model that tracks waves of optimism and pessimism among the investing public, and that model is the wave principle model. People are doing things now that I could never imagine putting my money into. Spending money buying junk bonds from all of these issuers, happy to own Greek debt. I think they're out of their minds, or Spain's debt, or Portugal's debt, or UK debt. And pretty soon that will include U.S. government debt as well. Now, I'm an individual who has been around a while. Perhaps you're a little bit more conservative as well. You wouldn't put your money into that kind of thing. But the public right now is riding a wave of optimism. That's exactly why we called a bottom in late February of 2009. We said this wave of pessimism is ending. Get out of the way. We're going to have a huge rally. Well, this is the result of optimism. People buy stocks. The spreads between junk bonds and more pristine bonds has narrowed. The appetite for buying junk bonds has suddenly increased dramatically. These are all results of optimism. And when that wave turns toward pessimism and people begin to look at these pieces of paper that they have in their portfolio, they're going to start panicking and flooding the market. I think the crash in junk bond prices next time around is going to be breathtaking. You definitely want to get out of that area before it starts.
Okay, I want to stay with the Fed for a moment. So the Fed officially says it will keep the interest rates low into the year 2011. We know that you can't agree with Mr. Bernanke by saying that not the Fed sets interest rates, but the markets. Is that right?
Absolutely right. But now, as I mentioned in Conquer the Crash, the normal direction of AAA bond rates in a depression and in this stage of the Kondratiev cycle is lower. And so far, the trend has been lower and lower and lower for the most part. But a little more than a year ago, we said we are seeing signs of a major peak in bond prices. Namely, we had 99% of traders bullish at the one time when the Fed said they would start buying Treasury bonds. And of course, everyone took that as gospel, believed that they would do that and keep rates lower. From that day forward, rates have risen naturally because the market always fools people. At the precise point when they're in full belief is exactly the wrong time to have it. And what I think is happening and what is going to stymie the Fed is that the marketplace is going to start demanding higher and higher interest rates once the trend turns toward more pessimism. They won't believe anything the government says or the Fed says, and in order for them to roll over their debt every few weeks, they're going to have to start allowing the rates to rise. And there's nothing the Fed can do about it because its only ammunition is to monetize more debt, and all that does is scare people into thinking there's more inflation. But they won't be shunning the bond market because of inflation fears. They're going to be shunning the bond market because of fear of default. So that's why rates are going to go up, and the Fed will be absolutely powerless to stop it.
Okay, thanks. So you mentioned it already, but I want to repeat this. The system of the United States was always based on a free market principle. Now you have an Obama government that seems to turn to socialism, or would you even call that fascism, when a government is in the pockets of a small group of banking crooks and does everything it can to serve the people well, who mainly created this mess. What's your opinion?
Well, of course, technically speaking, that's what socialism is, and that's what fascism is. Either word ultimately leads you to the same place. And even during the Bush administration, you might recall one of his favorite quotes. He said, I'm going to dispense with the free market in order to save the free market. That was his whole bailout plan. There's nobody in the government that I can recall, except for perhaps Ronald Reagan, since I've been alive, ever believed in the free market. So it's a myth that the U.S. has believed that for very long. It was founded on freedom, but ever since the day we had a constitutional convention, they've been government has been chipping away at those freedoms. Well, now there are virtually no limits to what they can do to counter a person's freedom. They just passed a law that is forcing everyone to patronize certain private entities known as insurance companies. So freedom is pretty well gone, and the trend is still in the wrong direction. But none of that is inflationary. It's all deflationary because every step the government takes, whether it forces one to buy health insurance or forces one to be covered by any mechanism at all, or forces the taxpayers to bail out failing corporations, or passes $1 trillion stimulus package, every one of those is the opposite of a stimulus. It hobbles the economy and hurts the economy's ability to pay interest on debt. So that is a double-edged sword hacking both directions. Both of them are going to lead us to deflation. The depressionary pressures of a contracting economy coupled with the inability to pay these high interest rates on debt.
Okay, it is your opinion, based on the Elliott wave cycle, that markets would decline to 400 points in the Dow in the forthcoming years. Markets would only be driven by the socio-economic mood, nothing else. What kind of developments are you currently observing in the United States in this context?
What we're experiencing now is a partial recovery in the bear market. If you don't understand what that means, take a look at what's been happening in Japan for the last 30 years. Mm-hmm. Every time there's a rebound in the Japanese stock market, everyone says, that's the end, here we go. Quantitative easing finally worked. You can buy Japan, it's at a major low. And then a few years later, it makes another new low. We're doing the same thing, but we're going to do it faster.
Right.
Because in the first 10 years of its bear market, in fact, maybe the first 20 years, Japan had other markets to sell to. It could still manufacture electronics and automobiles and sell them around the world. When the next wave of depression begins, markets around the world will dry up and no one will have anybody to sell to. You remember what happened to the Baltic Dry Index in 2008.
Yes.
Well, that's going to happen again, and it's going to restrict trade worldwide, and no one's going to have that cushion that Japan enjoyed earlier. So we are still in the cycle, and we're getting very, very close to an acceleration point.
Okay, so the citizens of the US seem to be very angry regarding the bailouts for the financial sector. There's a lot of anger and frustration with the politicians. What kind of results will that have in the long run? Is there a revolution on the horizon, or what do you think?
Well, one of the things that I forecast based on my theory of socioeconomic causality is that these waves of optimism and pessimism that we've been talking about, which are regulated internally, in other words, they simply arise from human interaction, ultimately have results. When the trend is positive toward positive mood, you get positive results such as people buying stocks, expanding their businesses, listening to happier music, dressing with more flair. And when the trend is down, you get the opposite. People sell stocks, they contract their businesses, they listen to more depressing music, and they wear more somber clothes. You can see it in every walk of life. So one of those aspects on the positive side is that people tend to be middle of the road politically during an uptrend in social mood. When the trend turns down, political opinion polarizes. So you get more people like our current president and administration that want to socialize everything and take over control, but you'll also get the other side of that pole where people are tired of government bothering them and inserting itself into every portion of their lives, stealing all of their money, and they start to rebel. So I think you're going to see a lot of social conflict between now and the end of this decade. We're only seeing hints of it in these very polite tea parties, but undoubtedly we will see social violence explode probably throughout Europe and the United States as well.